Hi everyone, this is Norris Tony coming to you live with another video. Before I get into the last two chapters of Managing Your Money, I'm going to read my prayer book, Walk in Faith. So let me see. I hope you all can hear me. Hold on, let me check something right quick. Y'all should be able to hear me. Let me see. Oh, no. Okay, y'all probably couldn't hear me at first, but y'all should be able to hear me now. Yeah, because my volume wasn't right on this computer because I reset my computer. I reloaded my computer for the first time since I bought it, which was a couple of years ago. But yeah, my computer is refreshed, needed to be refreshed. So now I'm going to read a Bible verse and I'm going to read a prayer from Walk in Faith. So I'm going to read a Bible verse and a prayer. For the law of the Spirit of life in Christ Jesus had made me free from the law of sin and death. This is from the book of Romans, chapter 8, verse 2. Here's the prayer. It's often said that prayer changes things. This is true, but more importantly, prayer changes us. God is poised to save all who call on him. Renewal in the Lord has brought us unspeakable joy. The object of our gratitude shall always be the Lord. Okay, now I'm going to get into these last two chapters of Managing Your Money, which is 21 and 22. Okay, chapter 21, investing. Some people decide to use a portion of their money for investing. This involves putting money into something that you believe will grow in value. Investments can bring rewards, but they can also be risky. And investors can lose the money they invested. Before investing money, people need to ask themselves, how much money can I afford to lose? Do I really need this money for something else? Different investments. People can choose to invest in a range of things. Some investors buy property and some buy art or classic cars. But the most common form of investment is to buy shares in a company or other organization. Buying shares. When investors buy shares in a company, they provide part of the money that's used to run that company. Companies are funded by millions of shares, so each share is a tiny part of the company's total wealth. What happens to shares? Shares can go up or down in value depending on the success of the company. If a company does well, the value of its shares will rise. So if investors sell their shares, they will make a profit. Profit up, loss bottom. If a company doesn't do as well as expected, the value of its shares will fall. So if investors sell their shares, they will make a loss. And I'm going to read some examples. I bought 100 shares at $1 a share. The company has grown fast and now my shares are worth $3 each. If you sell your 100 shares now, you will be paid $300 and make a profit of $200 on your investment. I also bought 100 shares at $1 a share. The company hasn't done well. Now my shares are worth $20 or 20 cents each or 20. 20% each. If you sell your 100 shares now, you will be paid $20 and make a loss of $80 on your investment. Paying dividends. As well as making money from selling shares, shareholders may receive dividend payments from the company they invested in. A dividend is a small share of a company's profit that is paid out to its shareholders. The size of the dividend depends on how successful the company has been in a year and how many shares a shareholder owns. Investment choices. Before people make the decision to invest their money, they need to ask themselves, how much can I afford to invest? How long can I manage without the money I've invested? Do I want to go for a high risk investment, which could earn more money but could also lose everything I've put in? Do I prefer a lower risk investment, which probably won't make so much money, but is more likely to keep my money safe? The world of investment is very complicated, so people often rely on experts to help them make their investment choices. Financial experts advise their clients on which companies to invest in and on the best times to buy and sell shares. Okay, that was chapter 21. Let's see. And nobody in my chat so far. I hope that y'all, when y'all watch this, y'all can hear me. Because I don't want to be speaking and y'all don't hear me. So I hope that y'all can hear me. If somebody come by and can't hear me, I would appreciate if y'all let me know. But for now, I'm going to get on the last and final chapter of this book, which is chapter 22, Insurance. Sometimes unexpected things can ruin your financial plans. You may damage your phone, lose your wallet, or crash your bike. And further in the future, you may face a range of expensive problems. Imagine how you will feel if your car broke down or your home was flooded or if you had an accident and lost your job. Serious problems like these are hard enough to deal with on their own without the added worry of finding the money to pay for them. So, how do you take steps to protect your money and make sure that if you have a problem, it doesn't end up costing you a fortune? Be prepared. People can prepare themselves for unexpected costs in these ways, keeping money in reserve for emergencies. Turn back to 106 for advice on saving up money to keep in reserve. Taking out insurance. Read the rest of this chapter to find out more. What is insurance? Insurance is a way to protect yourself from paying out lots of money if things go wrong. People make regular payments either once a year or once a month to an insurance company in return for an insurance policy. The policy provides a guarantee to pay most of the costs if certain problems occur. As soon as people start paying for their policy, they are protected and they have the right to claim money from their insurance company. All kinds of insurance. You can take out insurance on your home, your possessions, or your car, and many other aspects of your life. Some insurance policies are compulsory. It's against the law. Hold on, let me type this word in. I didn't know what it was, so I'm just gonna type it in and I'll continue reading on. So give me a second while I type this word. It's against the law to drive a vehicle that is uninsured. And you can't take out a mortgage on a property unless you have home builder's insurance. For other policies, people have to make their own decisions about whether they need protection or not. Get protected. Even though some insurance isn't that C word I typed in the chat, you could be taking a risk if you don't protect yourself. If you were going aboard, it would be a serious mistake to try to cut your costs by not paying for travel insurance. Now, does insurance work? When people take out an insurance policy, they make a payment called a premium, which can be paid monthly or yearly. The cost of the premium depends on the size of the risk and the value of what's being insured. Okay, here are some examples that I'm about to read. I'm an inexperienced driver, so my motor insurance premium is high. I've been driving for 20 years without any accidents, so my premium is much lower than yours. I drive a very expensive car, so my premium is high. My car would cost much less to repair than yours, so my premium is lower. Then was just some examples that I read. Making insurance claims. When a problem occurs, policyholders fill in a claim form. The details of the claim are checked carefully before the insurance company agrees to pay out money. Policyholders with a history of making lots of claims have to pay more for their insurance than people with fewer claims. People who haven't made any claims over a certain number of years are rewarded by having money taken off the cost of their policy. This is called a no claims bonus. Motor insurance. If you own a vehicle, you have to buy more insurance to help cover the cost of accidents and other problems. There are 3 types of insurance to choose between. Third party covers the cost of damage to another person's vehicle or property. Third party fire and thief covers the same cost as third party insurance, with added financial cover if your vehicle is stolen or damaged by fire. Fully comprehensive covers all the costs described above, plus the cost of damage to your own vehicle. The fully comprehensive insurance or the fully comprehensive policy is the most expensive. But if you choose one of the cheaper options, you risk facing some very large costs if something goes wrong. Home builders insurance. All mortgage payers have to take out a home builder's insurance policy. This covers the cost of repairing a property if it is damaged in some way, for example, in a fire or a storm. Home contents insurance. Home contents insurance. Home contents insurance covers the cost of replacing possessions that have been accidentally damaged or stolen. Clothes, computers, bicycles, and mobile phones can all be included in a home contents insurance policy, even if they are lost or damaged outside the home. Travel insurance. Travel insurance covers a range of expenses that travelers may face when they go on a holiday or travel for work. Excuse me. Most travel policies cover the cost of replacing lost or stolen bags and their contents, expenses if flights are delayed or there are other travel problems, having to cancel or cut short a holiday, emergency medical expenses. Travelers have to pay more for their insurance if they're going on a high risk holiday, such as climbing or snowboarding trip. Other insurance types. It's possible to insure many different things, but here are some of the most common policies. Health insurance covers some of the cost of medical treatment or care. Income protection guarantees some income if the policyholder is unable to work. Loan protection covers the cost of repaying a loan if the borrower becomes unemployed. Life insurance pays out money to family or other dependents if the policyholder dies. Pet insurance covers the cost of vet bills. Okay, let me see. Okay, and I'm gonna read this last page. It's called "Finding Help and Advice." Now, no, okay, I'm gonna read it. Now that you've read this book, you should be feeling confident about managing your money, but there may be times when you could do with advice. If you're having problems, it's good to talk to someone you know well. There are also some useful websites offering clear advice on money management. Some of these sites have online helplines with trained advisors who can give personal support and advice. You will find links to websites on Usherborn Quick Links. Okay, and that's the end of the book. Now the next live I do, I'm gonna read money words and terms, and that's gonna be the last thing in this book, the last live that I do, reading this book. So I'm done reading all the chapters. Let me see. I hope that y'all heard me, people that came in the chat or came to visit my live. Let me see if anybody commented. I think I'm the only one that commented. But yeah, like I said, I'm going to do one more live reading this book, Managing Your Money. You can get it from yahoo.com, the book. Not Yahoo, but Amazon.com. I think it's like $9 or $10 now to get or more, but it's not that much more. But you can get that book on Amazon.com. So since I have nobody that commented in my live, I want to thank whoever came by. I want to thank you all for watching. I love and appreciate all of you. And if you all can hear me, let me know in the comments what you think about this video and what you thought about the book. So I hope you all like, comment, subscribe, share the video if you want. Thanks for watching, and you all have a good night. Peace.